So these can be very powerful tools to apply in your trading. All right, so the last thing I want to cover is just a few patterns and price targets, because patterns and price targets really help us shape up our thesis of what the price action is going to do in the near term. And if we look at this April 7th bottom, we have one of the most common topping or bottoming patterns, which is an inverse head and shoulders. So you have left shoulder, head, and a right shoulder. Anyway, if we're looking at this from the bottom end, you draw a neckline across this pattern, and then you measure from that center of the head to the neckline, and then you project that out on the candle that breaks out. And where does that land? It lands right at the top of this range. And with each of these price targets, I always think, does this make logical sense with what I'm seeing to the left side of the chart? And yes, it aligns with these previous peaks right here that we see in the price action and this trend line that we have drawn. So it's a logical target that I am going to take seriously. But the interesting thing about this inverse head and shoulders is as it formed, we actually got a larger inverse head and shoulders with another price target. So we have left shoulder, bigger head, and the right shoulder. We generally want these shoulders to be fairly similar in size in terms of the depth and the width of the shoulders. And whenever you have an inverse head and shoulders with a horizontal neckline, it is slightly stronger than, say, the diagonal neckline we had here. And if we map that out like so to the breakout candle right there, where does that bring us? Well, it brings us to 178, which if I'm looking at this at the time, I'm like, oh, the 200-day moving average is there. That makes a lot of sense. Oh my gosh, we have these two previous peaks that are exactly in the same price range. So it is a logical price target that makes a ton of sense, and that gives it more validity, at least in my book. Now, if we're looking at the top here we have what's called a double top, where selling pressure is coming in at a very even point. You might say, well, those tops aren't totally even. There's just one wick that wicked up for like 15 minutes, and it proves the point that sellers are really stepping in this range no matter how hard the buyers are trying. So to measure out a double top price target, we draw a neckline across the top. We take the valley in the center, map it out to that point there, and then project it off the bottom of the price action. Now, a double top isn't validated until you break below that lowest price point. So until we broke down right here, this wasn't a valid target, but it can still give you a zone to aim for. And in this downtrend, once this is validated, this had all the hallmarks of a bottom in terms of the charts being oversold on the RSI, and we got mean reversion signals, but we hadn't hit the price target yet.